evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Tuesday, the 19th of March, 2024. Well, you know what tomorrow is. Tomorrow, the big event is going to be not the Mortgage Bankers Association numbers at 6, but at 1 o'clock in the afternoon, the statement by the Federal Reserve as to what the monetary policy is, along with the dot plot. Then about 20, 30 minutes later, we'll be hearing from Fed Chair Powell. He'll be first speaking, and then he'll take a lot of questions. And on those questions, the question is going to be the runoff of the balance sheet. What do they think with the hot PPI, CPI readings that we've had? What's his attitude on further rate cuts, when they might set in, just like he was asked the time before. Now, the chart I want to go to for the moment here is Schlumberger. And I'm showing it a little different because I wanted to show you where the market has been. It broke down, and how it's been gradually coming back up as we're watching a whole move happening in energy. We're watching copper market move. So you're starting to get some inflation plays in these markets. The trend is up on the swing line. You have higher lows and higher highs, as you could see. So until the market takes out this low right over here, which is in this 5270 level, until that's taken out, we still look as though we can move higher. The market has finally cleared the 200-day average, so as long as that's not taken out, the potential lies for the market to try to work even a little bit higher than that. And you could see that you're running at the upper Bollinger Band right here and that number. Now, often that's a number that can stop markets. One of two things happens. If it doesn't stop it, you've already been almost daily hitting the Bollinger Band, what I call that gorilla glue trade. It can just start moving away. This is your base area. Now you've got the embedded reading. Basically, this market could be an all-go signal. In DraftKings, if you remember, I was honing in on this about a week and a half, 2 weeks ago before we got up through this high. And I thought we would get through that just as we approach March Madness, which, as you know, kicks off this week. So will the betting set in? Will they get all the billions they think they're going to get in it? Will this be able to make money on it? Well, if it can, the trend is up, higher lows, higher highs. First resistance, 44.5. A warning sign, to me at least, would be taking out 41.40 in the market. In UGA, the gasoline fund, this is again called that gorilla glue trade. It's similar to what Schlumberger is doing. See how it's hitting every day, this upper band? It moves out of tightness in a sideways action. This is a breakout to the upside until you embed. Well, you're just overbought, but on pullbacks, I look for strong support in this market. Could it be a $3 break? Well, it's possible, but the market doesn't act like it wants to give you that. In XLF, the financial services, tomorrow they're directly impacted by whatever the Fed says. Now remember, you're going to get a yin-yang impact. What do I mean by that? At 1 o'clock, we get our Fed announcement. What time is that in, think about it, Asia? What time is that in Europe, all right? Asia, it's morning. Europe, they've already gone home for dinners or whatever they're doing. It's 6, 7 at night in many spots there. That is what you deal with. It goes around the world, and by the morning, we have a pretty good idea. Was there a shock? Did the markets not like what the Fed said? Did they love it, and the market keeps making higher highs? What's been the pattern? The naysayers buy every break, and the market has been going up. Not every index is as strong as the other, but that's what's been going on. When you look at the industrial sector, higher lows, higher highs. First resistance, 123.27. We've worked off an overbought condition. I would have preferred this market to have hit the 18-day average of closes, because often when you lose that embedded reading and that red line gets back under 79, that's what occurs. If it doesn't occur and you take out this high up here, the market could be off to the races one more time. Big failure in the CME group. They had the opportunity, and I mentioned to you yesterday, if it got over the 220.19 level today, I thought the market had a big shot at going to 222.81. Instead, you reverse course. You've lost your way in this market. Momentum is turned down. It's basically, I think, a failure on the chart at this point. Wouldn't surprise me if you want to work a bit lower. In the consumer discretionary, RSPD, the battleground was a correction back to the 18-day average. Momentum had been pointing down. It sort of flattened out here, but we're not in a trend per se. You've got the highest high, then you broke down, and you've got a higher high, lower low. That's not what I'd call much of anything. And XHB. You can see how the market is broken down here, but the trend has stayed up. What has this market done? Do you notice how it's basically stayed over the red line, the 18-day average of closes? And here, too, these markets are so bullish that when they're losing the embedded reading, they're not quite making it to the 18-day average. I find that actually disheartening because normally they do that. So that's a bit of a throwback to the market. In the energy sector, and remember, this is made up of the big energy companies. Well, again, that's why I'm showing you Schlumberger. You can see how the markets are moving up. They're still in a beautiful uptrend as they're going. In the gold market, a bit of a correction setting in. You did lose the embedded reading. Now, in order to get it back, you have to close over 80 tomorrow. But at this point, the way that I teach charting, I would have told traders, go to the sidelines, we'll take another look at the market. And basically, they were long in the 2015 area, so it's no real money loss. But there was nothing made on the trade, which is always not what I want to see. In the silver market, you're at the point where you had a crossover where the 18-day average got over. As you can see, both the gray line right here, the light gray, and the green, and that was your bullish crossover, and you've gone up and made new highs. Moving average traders like to see crossovers. They could be, they give them all the different names in the world, but let's just say Golden Cross, ideas like that, and they start talking them. In my new charting course, I explain all those. And the new charting course, by the way, I have finished recording. We're compiling it right now. It should be ready in days. I'm not talking a week. I'm talking days. And I really like how it's come out. It's not the 8-hour course that I used to do, but it's hours, many hours long. It's not more than 8, thank God. And I think you'll learn with it a different way. Again, number of years have gone by since I last did it. It's much easier to do it in certain ways. In the copper market, we got over the upper Bollinger Band for several days, and now we're pulling back. Okay, support is all the way back towards the $38 area. How much of a break does it get here? That's going to be a big question, partly with tomorrow's reaction to the FOMC, because we'll get an idea what interest rates are going to do. In TLT, you can see how the market is sold off going into the Fed report. The lower this goes, the higher interest rates are going. That's basically what it's done. But you've gotten to the point where the market has now got above it, the 100-day average, the 18 and the 200. So even if it popped, I'd look for some resistance. It is oversold going into everything. In the dollar index, you're still in an uptrend. I look for resistance around the 28.17 level. And here, I want to just point to you that you can get all of our free offers going into this report. So yeah, you see what the dollar's doing, but what about this? You get to get, and by the way, this is how the shopping cart works. You click on that blue, and then anything you click here in our different offerings, you put in there. From there, you put in your name, your address, email. We will send it out typically within a day or so. But you can see your guide to technical indicators are in here, the Arun indicator, the video series on that, pivot point video charting course on that to work with. So you get all these different ways to work with the market. One of my favorites is the price counts that the Linn Group has. You don't see them in other companies. It's proprietary to us. But try to imagine this. The market sets off in a trend. How far up or down is it going to go? What are the different layers it may go to? It's not about catching the trend. It's where it may go. How do you get these offers? It's simple. Go to iraepstein.com, free offers. You can give a click up here at any point in time. You'll see an icon. Click that. It'll take you to this area as well. I'm Ira. You have yourself a great day. I'll catch up with you tomorrow night as we review what the Fed said and how the market reacted to it.